Hello, everyone, and welcome back to another episode, rather another webinar series from Axis Mutual Fund. We're here today to talk to you about a very interesting offering. While we've heard about the India growth story, the Bharat growth story, etc., do we really know how to capture it, right? And also while capturing the story, we also consider how am I going to, for example, manage so many stocks together? How am I going to manage so many industries together? As an individual investor, that's where we thought, why not come out with a similar index offering. So we're here to discuss Axis Nifty 500 Index Fund. This is a new NFO. It's actually going on right now, and we have with us Bableen Kaur. She's a senior product manager, and comes with a for diverse, with a vast experience within product management, within indices, etc. So let's hand it over to Bableen, and I would urge the ladies and gentlemen on the call to add as many questions as you can. If you're watching this on YouTube, you can add your questions in comments. Same thing for Facebook or for Twitter. If you're watching this on the link that you would have received to join in, you can hit the question button on the right side of the page, and we'll answer as many questions as we can. So, all right, Pavleen, over to you.
Thanks, Siddhant. So I have a presentation which I'll run you through. So I'll share my screen. Yeah. So as Siddhant mentioned, so the NFO is currently ongoing. So it started on 26th of June and will continue till 9th of July. So starting with the presentation now. So as we all know, India is one of the fastest growing economies in the world today. So there are a lot of drivers in place which are providing impetus to the growth. So we have a very young workforce. We have a stable government. There are a lot of business-oriented policies and a lot of focus on reforms. We're also seeing increased digitization, financialization. So we have Quality Central Bank, which is doing a very good job. Also, a lot of companies globally are today looking at diversifying their supply chains. So as they produce more in India, we would benefit. So all of these factors today are contributing to the India growth story. If you look at it, India today is the 5th largest economy in the world. So by 2027, so it's expected that we will surpass Japan and Germany and become the 3rd largest economy in the world. So with an average growth rate of between 22 to 27, average growth rate of 7.5%. So we are growing very rapidly, and the same is also reflected in the markets. If you look at the market cap of India, so we are 5th largest in terms of the market cap globally. So our market cap, around May end touched $5 trillion US. So if you look at it, the pace at which it is growing is quite rapid, right? So we hit the 1 trillion market cap in 2007, and then the 2 trillion took next 10 years. So 2 trillion to 4 trillion, the next doubling of the market cap took 6.5 years. So now from 4 trillion to 5 trillion, it's taken us 1 year. So we're growing at a very rapid pace. And if you look at the companies in each of the market cap buckets, so in 2019, we had 5 companies which had a market cap of more than 50 billion US. So today we have 12 companies. Likewise, companies with a market cap between 10 to 50 billion increased from 41 to 85. So if you look at it, the companies in various market cap buckets has almost doubled in the last 4 years, So this rapid growth, how do we capture and be a part of this rapid growth that we are seeing? So is there an index which can help us to capture this? Yes, we have an index. So this index provides a broader market cap coverage. It provides you diversification to various segments of the market in terms of stocks, in terms of sectors, and also provides better risk-adjusted returns on a long-term basis. So we are talking about Nifty 500 index here. So now this slide gives you a summary of how Nifty 500 stacks up with respect to, the large cap segment of the market, mid cap, small cap. So large cap covers primarily your top 100 stocks, and they cover 64% of the listed market cap. Mid cap is the next 150 stocks covering 18% of the market cap. Small cap is the next to 50 stocks covering 10% of the market cap. Now, Nifty 500 covers a chunk of the Indian listed market cap space, and you have 92% of the listed market cap is covered by Nifty 500. So it's a broad-based index, broader index, providing you a flavor of large, mid, and small cap. So it's an all-in-one index covering all of these. And if you look at the sector level diversification, so large caps, they're predominantly you have big sectors which are dominating the large caps. And in mid and small caps, so the top three sectors in large caps are 53%. If you look at the mid and small cap, the top three sectors are close to 45-46%. Now, Nifty 500 is a combination of all of these. So in terms of sector level diversification, it covers a whole lot of sectors, and the top three sectors contribute 46%. And if you look at the stock level diversification, again, large caps, top 100 stocks. So diversification here is low compared to what a mid and small cap would have. And a Nifty 500 is a balanced portfolio which provides you an optimal kind of stock level diversification, neither too diluted nor too concentrated. And if we talk about the returns profile, right, if you look at it, when we talk about returns, it's very important to look at the risk-adjusted returns. What is the sort of kind of return that you're getting per unit of risk that you have taken? So with a similar volatility of a large cap, Nifty 500 is providing you higher returns, which translates to better risk-adjusted returns. Likewise, mid and small caps, they have, mid and small caps, while they have generated higher returns, but they're also more volatile in nature, right? So they have a higher growth potential, but that comes with a higher risk. Now, Nifty 500 provides you higher returns, but they are coming with a lower volatility here. Okay, so in terms of market cap coverage, if you look at it back in 2010, Nifty 500 covered, 85% of the India's listed market cap. Today, it covers 92% of India's listed market cap. And within this 92%, if you look at the breakup of large, mid, and small cap, it's predominantly, 75% large caps. Then mid caps are close to 17%, and small caps are close to 9%. Now, if you look at this breakup of large, mid, and small cap, you will observe that how from 2010, the exposure, the composition of large caps has reduced from 81 to 75, while mid and small caps has increased. So this basically signifies the higher growth potential of mid and small caps versus the large caps. So Nifty, an index like Nifty 500 provides you an optimal mix of all of these market caps. Now, if we look at if you look at the market caps, right, they also perform in cycles, and it's very difficult to predict which market cap will outperform. So sometimes large caps may outperform, sometimes mid cap may outperform, or small caps may outperform. So if you look at the numbers here in the last 14 years, right, in 5 years, large caps have outperformed. In 6 years, small caps have outperformed, and 3 years, mid cap has outperformed. So they are also performing in cycles. Now, how do we time it? We cannot time and predict which market cap will outperform. So an optimal investment approach would be to take exposure to all of these, right? Have an exposure to large, mid, and small cap. And so this will provide you, following this strategy can help you outperform across market cycles. And that's what a Nifty 500 index sort of endeavors to do. It provides you exposure across, it provides you exposure to large, mid, and small cap, and hence, it has the potential to outperform across market cycles. Now, if you look at the sectors today, the Indian listed market, so the listed market in India today covers 22 sectors. right? Now, out of these 22 sectors, Nifty 500 provides exposure to 21 sectors. So it's very diversified in terms of the sectoral representation also. So it not only covers the larger sectors like financials, IT, oil and gas, but there are a lot of unique sectors also that are covered, right? Now, any sector, another way to look at it is that any sector which may outperform, you need not time it, it is a part of your portfolio. For example, in the last 1 year, realty, capital goods has done quite well. So these are a part of your portfolio. So you have an exposure, diversified exposure to all these sectors. And that is, the kind of benefit that you have by investing in Nifty 500. If you look at the stock level concentration, so large cap index, which is Nifty 100, so covers, for example, 45% of the top 10 stocks cover 45% of the constitute 45% of the index. So it's a very concentrated portfolio. Now, mid and small cap cover around 14 and 11% of the portfolio, of the index portfolio, right? So this is a very diluted portfolio we're talking about. If you look at Nifty 500, the top 10 stocks constitute 33% of the index. So it's a very balanced approach. Your portfolio is neither very concentrated nor very diluted. So it gives you a balanced exposure in this. So it gives you balanced exposure in terms of the stock level diversification as well. Now, if you look at the performance, right? So last 25 years, so this graph shows you the performance for last 25 years. So despite of various events, despite of various market cycles, Nifty 500 has, outperformed Nifty 50, as you can see. So in the last 25 years, the return that the scheme that the index has given are close to 15.66% CAGR versus a Nifty 50 providing you a CAGR returns of around 14%. Now, while the number here may seem like it's just a 1.5% sort of a difference in CAGR returns, but if you look at it in absolute terms, right? So if you had invested 1 lakh rupees in Nifty 500, it would have grown to 37 lakhs. While a 1 lakh rupee invested in Nifty 50 would have grown to 26 lakhs. So on an absolute terms, it's a difference of 11 lakh rupees on an investment of 1 lakh. So that is the kind of difference we are talking about. And this difference we are able to see because of the compounding. While in CAGR terms, it may not be much, but because of the compounding effect, the difference in absolute terms is huge. Okay, now if you look at the performance of Nifty 500 and large cap, mid cap, and small cap index, so Nifty 500 has kind of given you returns higher than large caps. But if you look at the standard deviation or your volatility of returns, so it is at par with the large caps, right? So as we had seen in the previous slide also. So we are getting higher returns, but with a lower or a similar kind of a risk, right? So the risk-adjusted return profile is better. Now, mid and small caps, while they have a higher return potential, but they come with more volatility or standard deviation of returns. So now Nifty 500, how is it able to give more return than large caps? Because it's a mix of large, mid, and small caps. So you are participating in the, so you have benefit of stability of large caps as well as you are participating in the growth potential of mid and small caps. So on an overall basis, your risk-adjusted returns are much better. Okay, so now if you look at it, there are only 5 passive schemes in the industry which are tracking either Nifty 500 or BSE 500 with an AUM of 1,500 crores. On the other hand, if you look at other strategies like Nifty 50 or a Sensex, so there are schemes, 35 schemes with an AUM of close to 5 lakh crores tracking these indices. In the active space, large cap, multi cap, flexi cap. So we have a lot of schemes tracking having an AUM of 3 lakh, 1 lakh, again around 3 lakh crores. Now, what does this signify? In spite of all the benefits that we talked about, Nifty 500. So this index is sort of on the passive side underrepresented in an investor's portfolio. So it has a growth potential to have capture a higher share in an investor's portfolio. So there is not much AUM in this category, but given the benefits, there is scope for investors to have an higher exposure to Nifty 500 in their portfolios. Now to summarize, so everyone's talking about the India growth story. We know that there are multiple growth drivers in place. India is one of the fastest growing economies in the world. So we'll become third largest by 2027. So how do we participate in the rapid growth story that we are talking about? So our markets, in terms of market cap also, we have seen a rapid growth. So Nifty 500 index is the answer. So it covers a chunk of the market. It covers around 92% of the listed market universe. So a single index helps you capture a single index is so broad that it helps you capture the growth story on a holistic basis. So it's diversified across large, mid, and small caps. So you can benefit from the stability of large caps and growth potential of mid and small caps. And it's a very balanced portfolio in terms of stocks, right? If you look at it, neither too concentrated nor too diluted. In terms of sectors also, so in the listed market cap space covers 22 sectors. So out of that, 21 sectors find place in Nifty 500. So it allows you holistic exposure, allows you to capture the India growth story. So if you look at it today, if you look at the active schemes which are tracking, active schemes which have Nifty 500 as a benchmark, so there are close to 190 active schemes with an AUM of 10 lakh crores, right? So these schemes are trying to outperform Nifty 500. So there's a very popular index which is tracked by the active fund managers. Now on the passive side, as we saw in the previous slide, there is not much AUM in this category as of now. So there is a scope for increasing exposure to the index in an investor's portfolio through passive exposure. So it will kind of provide you a low cost option to have an exposure to Nifty 500. Now, let's talk about Axis Nifty 500 Index Fund. So Nifty 500 valuations, if you look at it, the PE is lower than the historic average. Dividend yield is close to 1%. Nifty 500 Index Fund. So the fund managers are Karthik Kumar and Sachin Relikar. And the minimum investment amount is 100 rupees and in multiples of 1. So just by investing a small amount of 100 rupees, also you can get exposure to 500 companies, And if you look at the SIP also, the minimum amount for the daily and monthly SIP is also 100 rupees. So you can either invest a lump sum or go through the SIP route. And if we talk about the exit load, it's a very minimal exit load for 15 days. Up to 15 days, exit load is 0.25%. And after that, it is nil. So yeah, so Siddhant, that's it from my side. If we have any questions, we can take them.
Probably. I think that was great. I think listening to you talk about this fund really makes me think, why have I not invested in it yet? I can't wait for this and the product to start, and I will for sure start my SIP. So, Bhavleen, I think we have a lot of questions here from a lot of customers, and I think across the board, especially YouTube, Twitter is blowing up. So we try to take as many questions as we can. But I would request the ladies and gentlemen here, in case we're not able to answer all of your questions, feel free to visit our website, axismf.com. We have some resources there you can consume. In case you have further doubts, you can always get in touch with us. So, Bhavleen, I think let's take this question, for example. A customer asks, what are the specific advantages of investing in the Nifty 500 index as compared to the other indices? Now, while you've already covered that, maybe if you can nuance your answer a little further, because the gentleman is an existing investor with us and has a few schemes. So I think is slightly more aware about index funds.
See, Nifty 500 provides you balanced exposure. Firstly, it covers the chunk of the Indian listed market, space, right? So it covers 92% of the Indian listed market cap today. So it's not just very sort of sectoral. It's unlike a very a sectoral fund or a large cap based fund. It provides you broader exposure across sectors, across market caps, covering a chunk of the listed market cap space. So it allows you to participate in the India growth story. So whichever sector may perform well, it's a part of your index. Whichever market cap may do well, it's a part of your index. So in that sense, I think it's an ideal product for a new investor who does not want to take any call whether they want to go for a large cap or a mid cap or a small cap, right? And secondly, for an existing investor, it can be part of their core portfolio, right? So even if they have, for example, a certain market cap based index product, so this will kind of reduce their risk because they have an exposure to everything here. So it can be a part of their core portfolio, and certain other products like a sectoral fund or something, a niche product can be a part of the satellite portfolio.
So, Bhavin, would it be fair to say that the Nifty 500 is more like, say, a multi-cap index since it's so broad-based?
See, Siddhant, in a multi-cap, how do we define a multi-cap category? A multi-cap category has minimum 25% exposure to large, mid, and small, right? While here, if you look at it, 75% is the large cap.
Large cap alone.
Okay. Yeah.
Fair. All right. We have another question from another investor. He asks, what is the expected direct TER for this fund? I know you've already covered it, but if you may want to repeat.
So the direct TER for the scheme will be 20 basis points.
Okay. All right. Pavleen, there's another couple of questions. I'll try to lump them together. Now, this is I think I've seen 7, 8 questions about the same thing, where customers are asking that the markets are at all-time high valuations. Is this the right product to enter via an SIP or via as a lump sum?
Okay. So it depends on the investor preference, right? While there is no right time to enter the market, right? So after the elections, the markets had dropped that day. Suppose that we have seen a 6-7% kind of a rally in the markets. So one cannot time the markets. One should always look at long-term investment, whether you are going for a SIP route or a lump sum route. Your endeavor should be to invest for the long term, because it sort of will even out any sort of volatility in the returns that you may see, and equity as an asset class will give you a compounding benefit. So depending on your preference, you can go for lump sum or you can invest through SIP. So for both of these, the minimum investment amount is 100 rupees. Yeah.
All right. Thank you. And again, I think similar questions that I'm lumping together is customers are asking about the tax implication of an investment in the Axis Nifty 500. So if you could shed some light on that, please.
So it's taxed just like any other equity mutual fund. So for the short term, that is up to 1 year, you have a taxation of 15%, and long-term taxation, which is more than 1 year, it's taxed at the rate of 10%.
All right, great. I think you've already covered. Now, a couple of folks are asking about sector-wise breakdowns. So if you could perhaps just go back for the sake of repetition, how is the Nifty 500, what comprises, what sectors and what rates?
Yeah. So Nifty 500 comprises of 21 sectors, right? So if you look at it, the large cap index constitutes of 14 sectors. India's listed market cap constitutes 22 sectors. So out of that, 21 are a part of Nifty 500. And in this, you have certain big sectors, your financials, oil and gas, IT. Along with that, you have exposure to certain unique sectors also, like you have realty, you have forest material, construction material. So all of these are a part of the index.
All right. Okay. I think this is a very interesting one. Actually, this question caught my eye, but I thought I'll ask you a few more before this. The gentleman asked, can you shed some light on the performance of the Nifty 500, specifically with respect to international shock, the subprime crisis, the pandemic, Russia-Ukraine war, Israel conflict, etc. So, what are your views on that?
So as I showed a slide in my presentation, how Nifty 500 has, grown despite the various events, despite the various market cycles. So at the time of events, the markets may fall, right? But that should be a buying opportunity for you. You should always look for investment for the long term, right? So on a longer term basis, the index will sort of uh, look behind the challenges and sort of has given you better returns. Like in the last 25 years, we've seen it has given a CAGR return of close to 15-16%. So I think investors should not be worried about any sort of events or dips which are happening on a temporary basis, and that should be in fact looked as a buying opportunity.
Fair. I think so, and I think that's exactly what even the graph you showed, signified. So I think we have a last couple of questions. I'll probably run through them quickly. This is actually very interesting. Sorry, what is the significance of the Nifty 500 index in context of the Indian market?
So Siddhant, see, we are talking about India being the fastest growing economy. So we are saying that by 2027 it will become the third largest economy. So the same is also reflected in in our markets also, right? So our market cap has crossed 5 trillion US dollars. So in that sense, do we have an index which is broad enough to capture this rapid growth? Right. So Nifty 500 covers a broader chunk of the market. So it covers 92% of this listed market cap space. So if you were to say how to, an index which would allow you to holistically capture this growth story, that is Nifty 500.
Fair. I think the next question is quite connected to this, where we initially mentioned about the Bharat growth story or the India growth story in our presentation. Could you perhaps shed some light on that and maybe call out the top 10 stocks that make up the sector, if you have that data available? Or
So can you repeat the question, Siddhant?
so we mentioned about the India growth story through this conversation. So if you could shed some light on how the Nifty 500 captures the India growth story or the Bharat growth story. And also in doing so, if you could help call out the top 5 or the top 10 stocks that are creating this growth.
See, Siddhant, so if we talk about the growth story, so Nifty 500, as I mentioned, covers 92% of the market cap. So it allows you to capture the rapid growth that we are seeing in the economy, which is reflected in the markets. Now, the top stocks, if you look at it, at various points in time, you would have different stocks which would have contributed to it. For example, if you look at different stocks, different sectors which have contributed to it, right? Now, so in that sense, it's very important to have a exposure to a holistic index which is covering everything. So now this index, any stock may outperform, any sector may outperform. It is a part of your index, right? So you are able to capture that growth potential. So for example, in the last 1 year, we saw realty outperforming, we saw energy outperforming, we saw capital goods outperforming. So all of these were a part of your index.
Yeah.
Right. So there is not a single stock or a single sector which will contribute to growth at all points in time. So sectors perform in cycles. Certain stocks contribute to are the best performing stocks at a given point in time. Then there will be a cycle where some other stocks would outperform. So having exposure to a diversified portfolio through Nifty 500 allows you to capture this growth story.
Thanks, Pavleen. I think you were quite articulate in that. And I think the ladies and gentlemen on this call should definitely visit our website to learn all about this fund. I think we've captured a lot of what Bablin said via some videos, via some emails that you would have received or will receive in the through this campaign. So, Bablin, I think that's about all that we have. Maybe any closing comments from your end?
Thanks, Siddhant. So I'll urge all investors to consider this fund, whether you are an existing investor, whether you are a new investor. You can look at this product. It can be a part of your core portfolio allocation, and it's a low cost way to get exposure to 500 companies with an investment as low as 100 rupees.
All right. Thank you, Pavleen. As for the folks on the call, thank you for your time. Please have a great weekend. Or visit accessmf.com or download our mobile app to learn all about this fund. Thank you and goodbye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.